Thank you very much for keeping time and joining us today. My name is Laura Chite. I'm the CEO of CIO East Africa, and I'm the one speaking up the session for the Fintech Summit. And we look forward to you having a fantastic next 2 days.
Very good morning, ladies and gentlemen. Fintech is always taken as a disruptor, and my presentation is mainly to drive to a conclusion that Fintech and banking and insurance industry has to get together to see that there is no second disruption as it happened earlier. Different factors which came into picture, whether it was a smartphone or different technologies came in picture, or was it consumer preference that they wanted to have the rights or the flexibility to do the transaction whenever they like to and wherever they are. As well as in 2008, after the whole meltdown of the economy, people were looking for a different way of doing the transaction, and that's how Fintech became one of the key disruptor in the market. Not forgetting that the government support for all these new different technologies to come in was always there, and that's how this has emerged a bigger disruptor in the market. On the top of it, we also have the millennial challenges, which I'll be discussing in the next slide. The key disruption which happened was in different folds, starting from the channels, where we used to believe that bank or an institution has to open an office. They have to have a brick and sand and with the cement, and then you put a building and then you put a billboard, and that's how a branch is open. But then it gets into the digital way of forming the channel mechanism. Customer service, which was very traditional from call center, it automatically started changing it to social service, and now the automatic bots, which also are being getting into play. Risk and fraud management, which was more on the human oriented, trying to put the software, as the demo showed, there will be a lot of machine-based intelligence which will be used to do the prediction as well as to avoid the frauds well on time. There's a lot of alternative banking from standard traditional platforms which was being exercised since a long time, and after this disruption, very different modes are working. There are a lot of successes in these, including Bitcoins and others. How the disruption is being perceived since some time. Lately, 50% of the CEOs of various different growing markets believe that the current business model what they have is not threatened only by the new entrant, but also by their key competition in the market. The only way the disruption can happen through your competition is only using the right technologies, and that's the key point that I like to raise in my presentation today. However, new entrant disruption is not ignored or cannot be overruled. It is almost 26% of those will also be threatened by them. And this is the question that we like to ask ourselves: are we really ready for that disruption which can happen again? Or is it the right time to disrupt ourselves? Layers of disruptions in the fintech market. I believe starting from the banking technologies that can have analytics, it can have data management, it can have CRM security, and many more. It can also go to the payments level, because that's where the key things have happened, starting from mobile technology to apps-based transactions and many more. And the third is the blockchain, which is cyber currencies and many more. Then it goes to the business finance, it includes the consumer finance, and also the alternative codes, which also the finance and insurance industry needs to see that is it the right time for you to add alternative code to what you're doing now. One of the key factors I was talking about is millennials. Just to put the various different definitions of millennials, the people those who were born in between 1980 to 1995 are called millennials. And this is what the demo said, that 90% of, or more than 90% of the people born in this era are actually carrying the smartphone today. And they are the biggest people to drive the trend, the different changes and the disruption in the market. Just the statistics of the United States, that almost by end of 2018, the projected income of this group of people is $3.39 trillion estimated. And they are the people those who like to see that they don't go to the traditional way as the old generations have gone. And I believe the best way is to keep disrupting yourself, and that disruption, if whichever the market you are in, has to be the technology based. We need to see and evaluate ourselves whether it's the right time for us to bring the change or any disruption can help us. The first thing that you have to evaluate in your inventory or the infrastructure or the resources that you have is the network. This network can be any based. The traditional way of doing any of the connectivity was always based on that you don't put all the eggs in one basket. So you connect a branch, you connect one service provider, take a backup, and possibly take one more backup. And then you have 3 different suppliers, 3 different invoices, and 3 different managers to manage the vendors, and then you need a supervisor on different managers managing the vendors. However, when the thing goes wrong, it goes wrong in many different areas, because it's possible that service provider use the common resources, common routes, and things to go wrong. So the managed WAN, which is slowly changing to SD, which is software device WAN, is more or less outsourcing to a single or 2 vendors, whereby you don't have to manage because it's firstly outsourced, second it is fully managed, and you'll be able to get all those statistics and reports well on time, as well as it will not be as expensive as pulling a fiber because it's based on the common infrastructure. Second will be on your data and the hosting transformation. Imagine that 10-15 years back, most of the banks wanted to host their servers in the server room, which should be close to the office, which should be secured so that you know the AC is working and nobody is entering there. It took some time for the whole industry to see that outsourcing the server room to a data center, and the data centers to qualify for tier 3 or tier 4, and also to certify for the security standards. And now we all believe that the cloud is the right way. We can always debate whether it should be private or a public cloud, but the statistics of growth of public cloud is much higher. We believe that 90% or more of the applications will be moving to the public cloud as we go. The third criteria for us to see that we don't get disruption from our competition will be on security. We all believe the security remains a key threat. However, with all these statistics, still it takes 140 days for us to know whether the hacker is already inside our network if the damage has not happened again. Any different cost of data breach is almost $4 million, and 20% of the organization has not even finalized the strategy for bring your own device, because that's where the key security threat happens. And that's how the 360-degree overview of the ICT security needs to be seen. You can put all your data inputs, storage, all your firewalls, your network, your cloud, and also the DDoS mitigation and many more security standards to go to the event management system, where you can capture all the events which are happening to all your devices, and so that you can have the big data which you can start evaluating as we go along. And then you put the security operations center which has the specialized evaluation tool and also the system analyst to see that the customer gets the right reports for it. The next level is having the big data, also enabling the machine learning. Machine learning, a simple example of know your customer, the KYC, used to be filling a form and getting a feedback form or a survey form to know what your customers are expecting. Today, a simple app that you download in your smartphone will be able to give much higher statistics to the service provider than what it used to be before. Starting from your gender, starting the age of the person, what sort of smartphone they use, what other stuff that the person is using who has downloaded the app, starts giving the trend and the behavior of the users, what they prefer. Similarly, automation, it used to be e-commerce, it was a big boom, it didn't go to a big level, but since the time digital world has come, everybody has almost triple if not 10 times to the budget what they had for e-commerce. Things have not changed much, but yes, people have much more security going over digital because that was one of the disruption factors that we have seen. Actually, I was reading one of the article which says invention of a note or a currency was the biggest achievement of mankind, because they could not trust each other. But the biggest challenge today is, do we really trust the person issuing the currency and the person who's keeping your currency into their banking system? The next is the transaction system or the transaction management. We believe that every transaction has to be monitored, should be part of the big data, and should also be analyzed to see various different trends. The transaction will not be limited to the financial transaction. It has to include all the different transactions which circulate around this. Today, you can have a smart card which can work as your debit card or a retail card. It can work as a loyalty card. It can work in your education sector. You can even use as a healthcare card. It can work in your transportation. You can use for e-ticketing system. It can remain as your digital ID, attendance or presence system. And also you can use it for good distribution as we saw in the last presentation. Blockchain, it was discussed quite a bit, and we believe a merger of fintech with FSI will be the key game changer, where we believe blockchain remains one of the key factor because of various different things which are going to happen in the market. Not forgetting that the mobility or the wireless will remain one of the key drivers for everything which is going to happen. We know that 4 billion users will be online by 2020 due to mobile phones, and 70% of all the internet users today are using the mobility devices one way or another. You can see the other statistics like IoT devices, almost 125 million units, the wearable units which will be shipped in 2019. And on IoT side, in 2025, the projected figure is almost 75 billion devices, which is almost 9 to 10 times of the world population. Not forgetting that Africa is all lives in rural. So any technology, any disruption you like to do, you have to say that at least 50 to 65% of the population who lives in rural, your technology should be able to support that. Starting from the remote, whether you are putting a Huduma center or a tele center, you can put a bank franchise, you can put a point of sale to see that the transactions are happening, and different mobile payments, you can do insurance, you can even attach an ATM. Just to recap, starting from traditional, which was based on mainframe branches and ATM, the life was very easy since the disruption happened. Since then, the life is digital. I can see on the left side is the version 1, right side is version 2, whereby things started getting from social to mobile. It was more on automation and cloud-based, but now more and more of artificial intelligence, blockchain and IoT will make the life very different as we go along. Our proposition to, if you look at on the left side, it's all the banking or the FSI chain, which happens starting from network, core products, accounts, and as well as the customer-facing units, starting from branches and ATMs and stuff. We have put down very much symmetrical to our services. We have all the physical layer of services and layer 3 services starting from MPLS, Internet, Cloud. Then we have put all the different services layer over it, starting from Internet of Things, managed WAN, whether it's a SIP used for voice or for video, and managed security. On the customer facing, we can manage your transaction end to end. We can have machine learning, which is more on artificial intelligence, or contact center, which is more on social and contact management, and also management. Thank you very much.
Good afternoon, everyone. My name is Vinesh, and today we're going to talk about the IoT in financial sector. However, before we go there, any wild guesses what my grandma said to me about IoT? Internet of Things. Anyone? Any wild guesses? Well, she said nothing. Because IoT was not there then. However, I'm pretty sure we will have a lot of stories to tell to our grandkids about IoT, by the way it moves. Yeah? So talking about IoT, putting it very, very simply, it's a combination of IT and OT. So when we say IT, we are looking at information technology, or the devices which is working on SNMP based protocols like TCP/IP, without getting into too much of technical details. On the other side, we have OT, that is operational technology, which runs on the SCADA based protocols. So when we combine these two and we get together a result which is more informed, helps towards more informed decision making and engaging to our customers, that's when the real potential of IoT is utilized. So it's endless possibilities with IoT. So without getting into too much of detail, let me share an example with you. I'm pretty sure a lot of us like a good cognac after our dinner. But how do we know that cognac is really genuine or it is fake? So Remy Martin few months back came with an idea of connecting bottles, or you can say connected bottles. So whenever you buy a Remy Martin bottle, let's say in China or somewhere, you just have to tap your mobile phone on top of it, download an application, and it can tell you whether that bottle is genuine or not. The moment you open the bottle, it tells you on the mobile app that the bottle is now open, and you are actually enjoying an original Remy Martin. So that's one example. So IoT can help us towards the monitoring and management on a real-time information basis, which leads to the data analytics platform, and also looking at the informed decision that can help one side of it. And then towards the end, we also have support from IoT to control our cost and leakages. Some quick numbers over here. So in the financial sector, IoT has been projected to deploy the sensors 12 billion by year 2020, out of which, if you look at it, the insurance and banking together is somewhere around 7 billion sensors to be deployed. Now, some of these numbers might look too big, elephantine, or to be true. But these are carefully researched numbers by some of the very credible organizations globally. Talking about the use cases in IoT financial sector. So I will not be getting into too much detail. We will be talking about 2 use cases, in depth, but we will not be touching all of them. But just to give you one example of usage-based insurance. So imagine today when you buy a car, most of us, we have cars coming from Japan or UK, and there's diagnostic platform. You call somebody, he hits it, and then you get the platform from it, and you get a diagnostic report. You get whether your car is really okay to buy or not. Imagine a device which is 2 inch by 3 inch. Every car manufactured after 2008 has got an OBD2 port in it. So all you need to do is just plug that device in your car, synchronize it with your mobile phone, and you get all the information about the car, right from the driving condition to the road conditions to the brake oil to the engine oil to the fuel economy. Everything is there on your mobile app. Now, where we can use that in the insurance industry is, let's say me and my friend Kevin over here sitting. We both have same car, we bought it together, everything is fine. He lives in Nairobi, drives very nicely, never goes above 50 kilometers an hour, and I live in the countryside, very poor road condition. I'm a rash driver. I drive maybe 100 kilometers an hour, pressing brakes every 10 seconds. Why should him and me be paying the same insurance premium year on year? His should be less and mine should be more, because I'm more prone to accidents, I'm more prone to wear and tear. So deploying this in the insurance companies can give us the visibility and saves drastic cost on the insurance premium side. So we'll talk about the 2 use cases, which is asset and infra management and agricultural loan insurance. The first use case, infra management. So if you look at IoT once again, I'd just like to explain the information technology and the operational technology. In any environment, you have these 2 separate type of systems. You have server, databases, application, network, which is pretty much running on the information technology side of it. On the other side, you have HVAC system, DG, power, you have fire, access controller. These are on the operational technology. Now, these 2 systems are pretty much running in silos. You have to deploy different type of tools, different type of people to monitor and manage this. Now, how about integrating these 2 and give you one single viewpoint? And what's the benefit of it? Imagine there is an engineer who is sitting in IT operations center and trying to troubleshoot a server which is showing a red flag. But that server might be showing a red flag because there is a 5-degree change in the temperature. So engineer who is troubleshooting the server might not be able to correlate in the first place that this red flag is because of the change in the temperature. So we are integrating and we are giving it one single view. It can be pretty much used anywhere and everywhere. You can connect the entire HQ and branches using these sensors and remote transmission units. So we have water, we have energy, security, CCTV, temperature and cooling, everything integrated into one. The same can be replicated for data center. The only difference is in the data center you have racks. So we can even go using IoT at the rack level, and we can see what is the power utilization, temperature, cooling at the rack level itself. And it is all GUI based. The same can be replicated to manage the ATMs. The operational technology is already there. You have the ATM cameras, you have got the access control. In some countries, we also have the access control to enter the ATM. So all that can be integrated into one single platform, and we can feed that into the IoT-enabled NOC. It's just to show you a a bank DC view, a data center view. So as I said, this is all GUI based. So you can click on any one of them and you can, the particular rack or particular cooling station will pop up and it can show whether it is working fine or not. So wherever you see green, it's all working. Wherever you see red, it's not working, so engineer can just tap to it. So what's the benefit? So as I said, first thing, the benefit is integrated platform. You have one single view. There's a reduction on the carbon footprint because you are better equipped to control and have visibility on your energy. You can even build in the logic in the data center or in any environment to control the temperature as per the day and time. And even you can do it as per the month. So in the summers, you can have different type of temperature. You really don't have to manually go and increase or decrease the temperature. It's all pre-integrated. And then definitely speedy resolution of the issues. Talking about the second point on the agricultural loan and insurance, what we are doing is, if you look at the banks, SACCOs and insurance today, agriculture economy today is contributing to about 27% in Kenya in GDP. And that's massive. We just can't ignore it because it's not organized at the moment. So how do we make sure that the loans that we are giving to the farmers actually, the credit worthiness of the loan is there? Or how do we go about setting the insurance premium? So what we do is, we look at the large area analytics platform. Now, this is not something that you buy. It's just that as in bank or a SACCO, you just plug it into this platform. So we have satellite and sensors data clubbed with the proprietary IP or machine learning language, further clubbed with the big data computing platform. Now together, what we get is, on a day-to-day basis, we can check the farming activities, we can look at the crop growth patterns, we can even look at the weather condition, harvest readiness, the water stress level in the ground. We can even go with the sub-meter imagery satellite level to track the wildlife and deforestation. What are the areas of impact? The areas of impact is the non-timber forestry products. The areas of impact is the beverages, which is like tea and coffee production, crop, vegetable production, even the wildlife management, as I said. So big picture value proposition. So what we get as an input is satellite data, economic data, weather data, agronomic data, and profile of the farmer itself. We feed all that into one single large area platform, and what we get out is the farm income credit worthiness. We get the crop monitoring and harvest readiness. We can even plug this into the food security program run by the government so that the proper demand and supply can be matched. We also look at the crop risk from the insurance perspective. So how it works? Quickly, a farmer approaches to a bank or SACCO for a loan. They do the KYC. They feed in the KYC data into the platform. Based on that, we look at the historical pattern. We can go as back as 20 years. We can even check whether that land is really okay for agriculture or not. Is the land near any river, or is the land in a drought area? So we can check all that from the imagery side of it. We can look at the zone side of it, wherein we can say what is the historical use of the land. Let's say a farmer is approaching for the loan to grow maize. But historically, that land has been, we have been using that land for, let's say, growing pineapple. So what will be the impact on the crop? So all that can be actually, we get out of it. We feed that into a blockchain platform, and what we give to the bank and SACCOs is the rating, is the credit worthiness of that farm. So bank and SACCOs can make informed decisions whether should we be going ahead with the loan or should we not going ahead with the loan. The same thing can be used for setting the premiums in the insurance side of it. We look at the historical data, we put everything into the time series analytics, and we pass that information to the insurance companies so that they can decide on what premium it should be. That brings to the organization where I belong, about SimbaNET quickly. So we have got experience of 19 years in the East Africa market. We have got 2,000 customers supported by 200 skills and qualified resources in the region. We have presence across East Africa. However, we are also doing business in other countries. We've got presence in about 18 countries through our partners. We are operating actually on all the access layers. So SimbaNET predominantly is known for connectivity, but there's a lot more. There's beyond connectivity is what we are working on. So, as I said, beyond connectivity, apart from the data, internet, and voice connectivity are also there in the managed services side of it. So, managed WAN, managed Wi-Fi, managed security. We are also giving security as a service, DDoS platforms, cloud services, and then there's a lot of special projects that we are running on the remote GSM infrastructure. There's maritime connectivity on the VSAT. We're getting into the telemedicine and iSchool and these kind of things. Just to quickly look at our infrastructure. So, in addition to our tie-up with different cable companies, we also have the terrestrial network, be Kenya, Tanzania, Uganda, Rwanda, Malawi, Zambia, Mozambique, South Africa. We have got our own terrestrial cable network. These are some of our key partners. And that's it. Thank you.